Hi, it's Adrienne with the Oliver team and Remax Universal. Wanted to talk to you today about 13 tax breaks for homeowners and home buyers. I'm going to go through these very briefly, so if you have any questions regarding them specifically, please contact me on an individual basis. So buying and owning a home can be a costly endeavor, so I wanted to give you some tips and tricks in order to lower that burden for you and your family. Number one, using retirement funds for down payment. If you're a first-time home buyer, you can use up to $10,000 out of your 401k tax-free to help you purchase your home. Number two, mortgage points deduction. This is points for your primary residence that when you pay them is the year that they are tax deductible. For instance, if you're purchasing a primary residence in 2021, for 2021's taxes, you would then be able to use them as a deduction. Number three, mortgage insurance premium. This is available for people who itemize on their taxes. Number four, mortgage interest deduction. You can itemize them as long as it's less than $750,000 sales price. Number five, mortgage interest credit. It's available if you are a lower income buyer and you were available and issued a qualified MCC. Number six, home office deduction. So if you office from your home, you're allowed to deduct this. The one thing that doesn't qualify for, that's very important, is it does not require or does not qualify when you are working remote. So a lot of us, because of the pandemic, are working remote. You do not qualify for this particular deduction. Number six, credits for energy cost savings and or improvements. So if you redo your windows, your AC, your doors, any of those things, and you make your home more energy efficient, a lot of times you can't deduct that from your taxes. Number eight is you can deduct anything that's medically necessary. So I know I work with a lot of our senior population, our active adult population, and they really like to age in place, I'm finding. And as they age in place, they have to make improvements to their home because of mobility issues. All of these items, if you save your receipts, should be itemized and tax deductible at the end of that year. Number nine, rental expenses. So if you use a home as a rental property, you have expenses associated with that, like taxes, upkeep, any improvements, all of those as well are tax deductible. Number 10, property taxes. So your property taxes up to a certain amount per state are actually tax deductible as well. Number 11 is debt forgiveness for short sale. So if you were to short sale your home, that debt that was discharged in the short sale counts as income. There is a way to deduct that and get it forgiven when you get your taxes. I think it's up to $100,000. Number 12, capital gains exclusion. So if you're selling your primary residence, you are not subject to capital gains tax. This is probably one of the biggest things that I hear from my clients who are worried about selling their primary residence. Then if you don't meet that threshold, leads me to 13. You can do increased basis. So if you are grossing more than the capital gains tax exclusion, which very rarely happens in Texas, a lot of times you can then increase basis your different things that you've done to the house over the years. So have you replaced the roof? Have you done floors? Have you done any improvements at all? And then you can itemize those to reduce your tax burden. This is Adrienne Oliver with the Oliver team. I hope you learned a little bit about tax breaks and benefits for homeowners and home buyers. If you have any questions specifically about any of these 13 items, I would love to hear from you. My cell phone is 832-217-7141. Thank you and make it a great day.